I'm Anna, the top woman trader in the world, and I assist inexperienced traders in generating profits. In this video, we'll discuss how to avoid common traps in trading. See you after the intro. Good morning, traders! Before we dive into this ocean of knowledge about trading and market bubbles, I have something important to tell you. If you want to see how I put all these great theories we're about to discuss into practice, don't forget to check out my courses. There, you will be able to understand about how I trade on stock indices and commodities. It's like sitting right next to me while I try to tame these financial bulls and bears, but without the risk of me stealing your coffee. Now, get ready, because we're about to start a journey into the fantastic and a bit crazy world of trading. I know, some of you are already thinking, oh no, how boring, but I promise, I'll try to make everything more fun than a TV series marathon. So why the hell should we talk about how to avoid traps in trading? Well, think of it as a survival course in the financial jungle. It's like being Bear Grizzly, you'll have to learn not to drink the nonsense they try to sell you out there. First of all, guys, I want you to get one thing into your head. Knowledge is power. You can't throw yourself into trading like you're Indiana Jones, jumping into the jungle without a map and a whip. You'd get lost in no time and end up being eaten by a financial crocodile. So, first rule, build yourself a solid knowledge base. But what the hell do you need to know? Well, let's start with the basics. You need to understand how markets work. It sounds nerdy, I know, but trust me, it's fundamental. You need to know the difference between stocks, bonds, currencies, futures, options, basically all these financial instruments that at first seem written in ancient Aramaic. For example, stocks are like tiny pieces of ownership in a company. If you buy Apple stock, it's like you own a microscopic piece of Tim Cook. Okay, not exactly him, but you get it. Bonds, on the other hand, are like loans. It's as if you were lending money to the government or a company and they promise to pay it back to you with interest. Currencies? Well, those are like playing risk with the world's money. And it's not just about knowing what they are. You also need to understand what makes them move. For example, did you know that a single tweet from Elon Musk can send a cryptocurrency's price skyrocketing? It happened with Dogecoin. It's like if Thanos snapped his fingers, but instead of making half the universe disappear, he makes the markets go crazy. Then there is technical analysis. Okay, I know what you're thinking. What a bore, charts and numbers, but wait a minute, before falling asleep. Technical analysis is like learning to read tarot cards, but instead of predicting the future of your life, you predict the future of prices. You need to learn to read charts, understand trends, and use indicators. At first, it will seem like you are looking at hieroglyphics, but I promise you that when you start to understand something, you will feel like a real finance wizard. For example, there is this thing called Japanese candlesticks. No, they are not the ones you use to create a romantic atmosphere. They are charts that show the price movement. Imagine considering the whole story of a price in a day into a single candle. It's like taking a screenshot of the market. If you see a long green candle, it's as if the price had pole vaulted. If you instead see a short red candle, it's as if the price had taken a timid step back. And then there are indicators, stuff like RCI, Mickey D, Bollinger Bands. They sound like the names of Star Wars robots, right? But in reality, they are very powerful tools. The RCI, for example, tells you if asset is overbought or oversold. It's like having a thermometer that tells you if the market has a fever or if it is freezing. But it doesn't end there. There's also fundamental analysis. This is about understanding if a company is solid or if it's about to collapse, like a house of cards. You need to learn to read balance sheets, to understand what these famous PEA ratios are that everyone talks about as if they were the new Hollywood gossip. For example, the PE ratio. It sounds like a complicated name, but it's simple. It's like when you go to buy a pizza and look at the price-quality ratio. If a margarita pizza costs €50, you'll probably think it's too expensive, right? Well, the PE ratio does the same thing with stocks. It tells you if a stock costs too much compared to the company's earnings. And then there is risk management. This is serious stuff, guys. It's like putting on a helmet when you ride a motorcycle or a condom when you roll. Well, you get it. It can't save your skin. You need to learn to use stop losses, which are like a parachute for your investments. If things go wrong, they pull you out before you crash to the ground. For example, imagine you buy Netflix stocks at $500. You could put a stop loss at $450. It's like saying, okay, if the price goes below $450, sell everything. This way, even if Netflix suddenly decided to broadcast only documentaries about mushrooms and the price crashed, you'd be safe. You also need to learn to diversify your portfolio. It's like when you go to a party and you don't know what music they'll play. You don't just bring your favorite techno songs, but you put a bit of everything on your smartphone. That way, whenever they play, you'll be prepared. In trading, you might have a mix of tech stocks, some stocks of companies that pay nice dividends, and maybe a bit of gold as a hedge. Basically, don't put all your eggs in one basket. And let's not forget about trading psychology. Guys, this is a minefield. Emotions can play nasty tricks on you. Fear and greed are like the devil and holy water of trading. You will need to learn to control them. Otherwise, you'll end up making decisions with your gut instead of your head. For example, imagine you bought GameStop stocks during the famous short squeeze of 2021. The price goes from $20 to $200 in a few days. Greed tells you to hold that it will go up even more. Fear tells you to sell it before it crashes. What do? Well, if you have a solid trading plan, you will know exactly what to do instead of panicking. Okay, let's move on to the second point. Choosing a broker. Guys, this is fundamental. Don't go to the first one that comes along just because they promise you 1000% returns per month. Those are more fake than Trump's hair. Look for reliable, regulated brokers. It's like choosing a bank. You wouldn't put your savings in a bank operating from the back of a yacht, right? When you choose a broker, look around. Compare fees, the tools they offer, and the trading platform. For example, some brokers like Robinhood offer 0 commissions, but they might not have all the tools you needed. Others, like Interactive Brokers, have high fees but offer a wider range of tools. It's like choosing between an economy car or a luxury sedan. It depends on your needs. Third point, start with small amounts. I know, everyone dreams of becoming the next Warren Buffett overnight. But the reality is a bit different. Start with a little, learn, make mistakes, because you will, trust me. But make them with amounts that won't make you cry at night. It's like learning to drive. Better to make the first scratches on an old economy car than on a Ferrari, right? Imagine starting with €100. If you lose it, it will be an expensive lesson, but it won't ruin your life. If instead you start with €10,000 and lose them, well, I hope you like eating plain pasta for the next few months. Fourth, manage your emotions. Trading isn't just numbers and charts, it's also a battle against yourself. Fear, greed, euphoria, all these emotions can make you do stupid things. It's like being in a relationship. If you let yourself be guided only by emotions, you'll end up sending embarrassing messages at 3 in the morning. For example, imagine you bought Bitcoin at $60,000 and then saw it drop to $30,000. Fear might push you to sell everything in a panic. But if you've done your research and believe in the long-term potential, maybe the best thing is to hold on or even buy more at a discount price. It's like when your favorite ice cream is on sale. It's not the time to stop eating it, but to stock up. Fifth, don't blindly follow signals. Yes, I know, there are a lot of gurus out there promising infallible signals. They tell you things like, buy this stock now and you'll get rich. as if they had a direct line to the god of finance. But remember, in trading, there are no free lunches. Signals can be useful, but you always have to use your brain. For example, imagine a guru telling you to buy stocks in a small biotech company because they are about to announce a miracle cure. Sounds good, right? But before diving in, do your research. Check the company's financial statements, read industry news, and verify if there have been similar cases in the past. Don't be sheep following the herd. Be astute wolves. Fix. Avoid revenge trading. This is a classic, guys. You make a wrong trade and lose some money. And what do you feel like doing? Getting back in immediately to get revenge on the market. Don't do it. It's like when you fight with your partner and decide to get revenge by going out with the first person you meet. We all know how that ends, right? Imagine you've lost 500 euros on a Tesla trade. You're angry and frustrated and decide to get back in immediately with an even larger amount to recover. But Tesla continues to fall and you lose even more. It's like trying to put out a fire without gasoline. And finally, learn from your mistakes. Because you will make them, believe me. The important thing is not to never make mistakes, but to learn from each mistake. It's like when you cook. The first time you make a cake, it will probably be a disaster, but every time you make it again, it will get better and better, until one day you will find yourself making a cake worthy of MasterChef. For example, maybe you bought stocks of a company just because it was trendy, or without doing proper research and you lost money. Lesson learned, next time you will do a thorough analysis before investing. Or maybe you held a losing position for too long hoping for a recovery that never came. Lesson learned, next time you will use a stop loss. In short, guys, trading can be an incredibly rewarding activity, but you need to approach in the right way. It's like learning to play an instrument. At first you will make a lot of wrong notes. But with practice and dedication, one day you might play at the Carnegie Hall of Finance. Study, be disciplined, manage your emotions, and above all, never stop learning. The market is constantly evolving. It's like a financial chameleon. You need to be ready to change and adapt. And remember, patience is the virtue of the strong and of successful traders. Don't look for shortcuts and don't chase easy gains. Build your skills step by step, trade after trade. It's like building a house. If you want it to last over time, you need to make solid foundations. And if you really want to understand how I manage these situations in daily practice, my courses are just what you need. I'll explain exactly how to recognize signals on the charts of stocks, indices, and commodities, how to set the right money management, and how to protect your capital. You will understand in detail how I apply these strategies in the real world with practical examples and concrete trades. Think about where you could be in a year if you started learning the right strategies today. I look forward to seeing you in my courses, where you can understand all these techniques in detail and much more. It's time to move from theory to practice. Remember, the market is out there, full of opportunities. It's up to you to see them with wisdom, a bit of courage, and why not, with a little help from me. See you on the other side, budding traders. And remember, if you feel lost in the maze of charts or in the RCI seems more complicated than a Chinese restaurant menu, you know where to find me. I'm here to turn your health into loves. Don't forget to check out my memberships and my courses. They're your shortcut to avoid learning all these lessons the hard way and expensive way. Think of it as an investment in yourself. And believe me, it's the best kind of investment you can make.